You're watching Personal Finance with Coach Kelvin. Let's get into the video.
Hey guys, Coach Kelvin here. Now in today's video, I'm going to break down with you all of the passive income that I've managed to make for the month of January in 2022. Alright, so in January, I obviously had my second month of earning crypto staking rewards, so I've got a little more income to sort of disclose from there. I had all my dividends for my Vanguard holdings come through, so this worked out to be quite a fruitful month when it comes to passive income, and I'm really excited because obviously my goal is to over time improve my net worth but also my passive income to a point where I can eventually live off my investment income and not have to work to cover my living expenses. So let's get straight into it. With my crypto staking rewards this month, this sort of counts as a form of interest income, so I'm going to break down interest income first and then I'll go through all of my other income sources as I sort of progress through the video. So with my interest income, the first one I'm breaking down is my crypto staking rewards. I currently have two cryptocurrencies that I'm staking, and this is ADA or Cardano and also Veracity. So between the two of them, staking on the CoinSpot platform, link in description below, I earned $20.93. Now, crypto staking just basically means you're putting your coins to work on the blockchain to help improve the efficiency of transaction speeds, and this basically rewards you by keeping your cryptocurrency on the platform. It rewards you by paying you interest in that cryptocurrency. So whilst this is the dollar amount I've earned, $20.93, that of course could halve tomorrow if the price of my cryptocurrency went down. It could also go up tomorrow if the price of that cryptocurrency went up. So earning a staking reward in the same currency that you are staking obviously comes with its own risks, because you will pay your income tax on whatever it is you earned at the time you earned it. But if you had to sell your coins to cover that and the value has gone down, then you're obviously taking a loss and you still have that liability to cover. So that's worth noting. Alright, the next source of interest that I earned was from the peer-to-peer lending platform that I use, Plenti. Now, I mentioned in a much earlier video that I withdrew most of my funds from this platform. Due to the falling interest rates, this no longer is the most viable place for me to keep cash invested. So I've actually not got a lot of money on the platform, which means my returns are very low. For the month of January, Plenti earned me 14 cents. Alright. With my offset account that is attached to my mortgage, all of the money that I had offsetting the value of my mortgage saved me in interest $2.97. Now, how the offset account works is basically whatever value you have sitting in that account, it subtracts that from the remaining balance you have on the mortgage. So whatever you would have paid on that amount, you then no longer have to pay that amount in the liability. So if I had a mortgage for say $300,000, but in my offset I had $10,000, then the interest I would have to pay on that $10,000 is sort of withdrawn, and then you're only paying interest on $290,000 remaining. So even though I only keep a little bit of cash in my offset account, that $2.97 does reflect some sort of interest income, and therefore I have listed it today. So it is worth noting. Alright. Now, I'm going to go through my dividend income. So I use the micro investing platform RAIZ, and I only have a little bit of money in there. I do not do most of my investing through this. This is just through a few roundups, and also I use it for the rewards program. So if I had to buy something online that I was going to buy anyway, I can just use the RAIZ rewards, and then I get cash back invested into whichever companies that whichever companies that I buy through. They may have a rewards program where a percentage that you spend is then reinvested back into your investment account. So I have that available. Now, my RAIZ dividends for the month of January were $10.63. Whilst this is a fairly low amount, it's still quite high considering the balance I have in RAIZ, and the dividend income is generally done 6 monthly through this because of the holdings I have. Alright, now when it comes to my individual stock holdings, my dividends are much higher for the month of January because obviously Vanguard actually pays out quarterly, and you receive your dividend income in January for this quarter. So I have 5 Vanguard holdings that each paid a dividend this month, and I'm going to list them now. So VAE, which is the Vanguard All Asian Index minus Japan, that paid a dividend of $19.53, and I have dividend reinvestment plans established for all of my Vanguard holdings, so this will just completely be reinvested and grow over time. As that balance improves enough to buy another share, it'll simply reinvest in itself and my holding will continually grow. My second holding is VAS, which is the Vanguard Australian Shares Index, the top 300 index in Australia. So through VAS, I earned $281.20, and again, this is just simply reinvested. It purchased me 2 more shares and is allowing my amount of shares that I hold to continually grow over time. The third Vanguard holding I have is VEQ. Now this is the entire European index, and this holds like a lot of companies listed over in the UK, in Sweden, in Switzerland, so a lot of different companies that you don't get exposure to here in Australia. And VEQ paid me a dividend of $45.49. The next holding I have is VEU, which is the Whole World minus United States Vanguard Index Fund. This holds about 3,600 companies. It is an extremely low management expense ratio ETF, and I really like holding it. So my dividend from this was $173.50. Whilst again, that is not a lot, that's still enough to buy, almost 3 shares of VEU, so I'm really happy with that. VEU does not have a DRP option available here in Australia, however, so if I want to reinvest into that, I have to make that purchase and pay brokerage to do so. However, I think that's completely fine, because for me to actually earn any sort of dividend is a great thing, and if I'm going to be adding my money every month anyway, I'm paying brokerage to enter my money into the market, so I just add it to that pool and make my purchase. The fifth dividend I earn is VTS. Now, VTS is the entire United States market, and it doesn't hold any other companies from around the world. It's just everything listed in the United States. Now, this paid me $49.33, and this dividend is, yes, extremely low. The price of each individual unit is extremely high, and the dividend yield is like rock bottom. But when it comes down to it, the United States market does have a lower dividend yield than the Australian market overall. It has a much higher capital growth, and this is going to help increase my net worth over time. VTS as an ETF is my best performing asset as an ETF. It doesn't quite beat some of my individual companies that I've invested in, but as an ETF that is broadly diversified and low cost, it absolutely takes the cake for best performer in my experience. Yours may be different. Alright, that's my dividend income. Now, we're going to get onto property. So, my rental income that I earn from Property One, which is located here in Midland, Western Australia, before expenses, this earned $1,328.57. Now, when you take into account all the management fees, the admin fees, any of the processing of bills, etc., that the property manager takes, after expenses, this left me with $1,216.37. Now, this is a pretty good income from this property, especially considering how low my cost of interest on the mortgage is now. The interest rate is only 2.49%, so this actually means I'm not having to spend a whole lot to own this property, and the income's quite good. If I wanted to pay this property down faster, I absolutely have the capacity to, with how much I'm renting it for and how little it costs to own, so that's really cool. Now, the second property that I earned rental income from, this is one I own 50% with another party. Now, before expenses, this one earned $6,069 exactly. After expenses, however, so that means after taking out all of the property management fees, the cleaning fees, because it's a short-term rental, all of the maintenance, etc., this was left with $3,221.06. So this is still an extremely high rental amount. However, when you take into account how much you have to sort of add to the work with a short-term rental property like this, it almost makes more sense to just own something that is rented out on the long-term market and are done on a lease for, say, 6 to 12 months. However, because of the demand for properties like this, it has the potential to earn a lot of money. It's just in the current market, it's very unpredictable to see how much you're going to earn from renting a property like this out, especially as soon as an economy goes into lockdown or something like that. Now, this second property is located in Yeppoon in Queensland, on the east coast of Australia, so it's at least a bit of a diversification play from here in Western Australia. Alright, so that is all of my income sources for the month of January. Now, this brings us to a total of $5,041.15. Again, not my best month by a long shot, but still a pretty awesome month. I'm really happy with the dividends I received, especially. The rental income's pretty decent, and my crypto staking rewards keep growing at a pretty high rate. So I'm really excited to see where this sort of ends up over the next few months, and when I can compare this month to January of 2023. Alright guys, thanks for watching. If you got any value from this video, please like, share and subscribe, and I really look forward to seeing you in the next video.